Hello everyone, this is Ming Jong. Welcome to another episode of the daily market analysis for the S&P 500 E-mini futures for the session of 17th of September. So in this video, I am going to share with you the market recap for the last session and one potential trade review in the 3 minutes time frame, which I will include the entry, the exit, and also the rationale behind. And especially in that trade review, I will focus on how to actually trade the rising wedge pattern or the shortening of the truss. So in conjunction of the up truss or false breakout type of the entry. Alright, and going forward, I will talk about the bias, the key levels to pay attention to, and also my trading plan together with the market outlook for the session later. Okay, so let's just get started. So as we can see in this daily chart for the S&P 500, yesterday was a slightly bearish day, and we need to pay attention to the small spread here together with a relatively high volume. So really what's happening for yesterday's session? Let's zoom in and have a look here. So I think you can see that we definitely have a rejection tail here. There's a supply tail, and we have a kind of a false breakout. So temporary commitment above the previous day high here, but actually fell, and it fell with an increasing of the volume, which we can see it clearly in the hourly time frame, which I'm going to show you right now. Okay, so this is the hourly time frame, and you can see that the failure actually come in at about 2 a.m. and also the 3 a.m. sell off during my time zone. So you can see that. So that's the rejection tail and have this kind of the hidden uptrust if you are into the volume spread analysis, or you can just call it a false breakout. And the real sell-off is at the 3 a.m. bar, and we can see that this is a really bearish bar together with the spike of the supply. And the sell-off stopped right at the support level at the previous day low at around 3380, which was the level that I was watching, but it's kind of late. So definitely it's still a support level. You can see that it just bounced up right away after it touched that, but with a very weak rally up, and subsequently the sell-off continued during the Asian time zone throughout the European session for today's session. Okay, so just prior to the US opening at around 9:30 p.m. my time zone here, we have seen another kind of the false breakout here. So this is the previous day high level at around 3410, and we have witnessed the S&P 500 to have a breakout, committed 2 bars, and then followed by a break back in, and subsequently just kind of hang around, forming a consolidation in the middle of the range here. And at 2 a.m. is the real action coming, and followed by a sell-off at 3 a.m. here. So that's pretty much it for the yesterday action. So I do have a potential trade review to show you, because I wasn't trading yesterday and I just couldn't find any entry to enter for the trade, either long or short side, because it's just not at the levels that I have been anticipating. But certainly I found a really nice trade that I would definitely take that every time I see this kind of the setup, and is related to a rising wedge pattern. If you are into the pattern recognition, or you are a pattern type of the trader, so definitely you will recognize this type of the pattern. So you can call it a rising wedge, or it's just a bear wedge. So rising wedge is bearish in nature. Okay, but before I dive into the trade review, let me just give you a bit of the context. Let me zoom out a little bit here. Okay, so we see the previous session. So that's the previous US session is ending right here. And that's the Asian time zone. So we have a bit of the consolidation followed by the rally up, breaking out of the immediate resistance day high level at 34.08 or 34.10 here. Subsequently, it just consolidate a bit here, but you see that there wasn't any kind of the follow through to the upside. And in fact, during the US opening session, so let me just zoom out a little bit here. Okay, so that's at around 9:30 p.m. my time zone, which was the US opening session. We see that just prior to the session, the SP&P just kind of break back inside the range, but it didn't really have a very bearish action and kind of just consolidate a little bit here and have this kind of the localized spring and followed by another run up, but no follow through to the upside either, and eventually just break back inside and have this kind of a reaction. So it's kind of well, sort of waiting for the real price movement, which I think could be the Fed speaking at around 2 a.m. So that's where the real movement begin, and you can see it in reflected in the volume and together with the volatile session here, and also on the way down as well. So that's why you see this kind of the, well, kind of a weird movement going nowhere, no commitment to either side, to the upside or to the downside. So it's just kind of fluctuating in between. That's why it didn't really hit my level. If you recall or remember my video yesterday, I do talk about, well, it's a very straightforward level at a support at around 33.80, and we have a day high level somewhere around 34.10. So that's probably the level that I attempt to trade, but just take a look at the time here. So I think this could possible to have a trade here when it's kind of forming this kind of the rounding top and followed by a localized breakdown of the structure, and then so that's the sign of weakness, back test or backing up, followed by this kind of a reaction. But it's kind of a bit late, close to about 12, so I just hesitate to take this kind of the trade, especially when I'm so sleepy. Alright, so anyway, the real trade or the goodness of today's review is actually on this rising wedge pattern. So I think it's very nice pattern to recognize. You have this kind of the wedge pattern, but I just would like to emphasize again, that's the shortening of the upward thrust. So definitely suggesting the up momentum was fading, and it actually happened at a very interesting place. So that's the non-RTH high, the non-regular trading hours high, formed at around 7 p.m. or 6:30 just prior to the US session. So it's still considered as the London session, and you can call this type of the hidden uptrust because it just never closed above the level at around 34.17. So it's sort of have this kind of the hidden uptrust and forming the rising wedge, losing the up momentum at the right place with the hidden uptrust. So everything seems in place very nicely, and there are a lot of the confluence. So definitely first thing is the level, second is the losing of the up momentum with the rising wedge, and the third thing definitely is the supply level. So we see that once it's break back in, this candle is still within the wedge, and the next candle, the bearish type of candle, where it actually break down from the wedge here. So that's the breakdown candle. You can see that this is the spike of the supply. So definitely I think that is a, oh sorry, not this, that is the supply level. so spike of the supply here. So you can definitely take this kind of the short entry, and whether you are just taking right after the close of this bar based on the breakdown from this trend line, or whether you just consider this as a localized structure and it's close below and break below the localized structure here. So either way, it could become a very nice short entry. And you can notice that right after the sign of weakness, so this downswing is considered as a sign of weakness, and then followed by a weak rally up and did not really commit above this supply bar here. And subsequently you have another bearish bar which is acted as a breakout bar, because it actually break out from the localized support area and together with the reversal bar. So it's a weak rally, reversal plus breakout. So there are quite a few entry here. First entry definitely is right at this bar, after the close of this bar. Second type of entry is right after the backing up action, weak rally, followed by the breakout. And depending how you manage a trade, I think you can possibly ride it down with this downtrend. Alright, so I think this is the only trade that I would like to show you, despite that I did not have any kind of the trade yesterday. So it's just do not suit my trading method, so no trade for me. Alright, so let me just quickly get down to the hourly time frame and let's talk more on the current market condition and the market outlook and what do I expect from here on, together with my trading plan. See if I have any kind of the chance to initiate any kind of the trade for the later session. Okay, so you can see that right after the yesterday price action, this kind of the upthrust followed by the sell off and then breakdown from the support level 3380 followed by a weak rally, and we have the continuation to the downside, and it's a relatively sharp reaction during the non-RTH session, which is the Asian and also the European London session. So definitely I think I also talk about there was another level to watch around 3360 to 3350, but you can see that there wasn't any kind of the support. It just penetrates straight through without hesitation. So a relatively bearish movement, and I think definitely we have a chance to test the supporting level at 3300. So previous has been tested twice, so definitely in the later part of the session, I think just watch out if you can just go through or maybe form that kind of the reversal with a spring type of the action, temporary commitment below and then going back up again. Otherwise, if from here until the US session we can have the bullish price action, which it is currently unfolding after the oversold condition. So this is the oversold condition. You can see within the channel oversold here and then followed by rally up. But so far I think it's very important for S&P to overcome the immediate supply bar here at around 3340, 42, somewhere around there. So that's the first bar that I would like S&P 500 to overcome. And if you can overcome, then definitely I would like to see a test of these two bearish bar. So somewhere around 3355 to maybe 3380. So if you can just go back, and I want to see how you actually interact within the supply zone right here, and any type of the possible reversal trade, then could be a nice short entry to trade it to the downside, because right now I think it's very likely for S&P 500 to at least to test the immediate support level at 3300 level, and we'll need to see whether it will just break this level or it can bounce back up. Alright, so this is the immediate support level at 3300 level for the resistance level. definitely I'm looking at around 33.50 to 80, where these two supply bar here currently located. But definitely, first of all, you need to overcome this immediate commitment bar to the downside, 33.40 level. Okay, so my bias for today, I like to keep it for neutral, because I think either side can be traded, whether it's a long side or to the short side. So, but for the longer term, I think for the price action for the next few days will be crucial, because if it can just break down of the immediate support level at 3300 level, I think we'll see further weakness ahead to keep going down. And let me just go to a higher time frame, maybe 4 hour, because the next support level when it's breaking the 3300 level will be the previous accumulation zone. So that is 3230. So that's the orange level that I have drawn previously. So that's the next supporting level. So if you just break down, then definitely expect further weakness, and at least to test around 3230. Alright, so this is the end of the video. Hope you enjoyed it and get something useful out from the video. If you like the video, just click like and also hover to my name or picture to follow me. And do remember to subscribe to my channel so that you get instant notification of my future video ideas. And as usual, if you have any kind of the comments, suggestion or trade ideas you'd like to share with me, feel free to comment them below. I will reply to you. Thanks for watching. I will talk to you soon. Bye bye.